And joining me now with more on markets is Keith Fitzgerald. He's principal at Fitzgerald Group. Keith, it's great to see you. Happy early New Year. And as we get ready for 2025, what are your takeaways from 2024?
Well, I got to tell you, Happy New Year to you ahead of time, and I couldn't be more thrilled to see the year wind up the way it is. You know, it's 2 consecutive years of 20+% gains. We've got AI emerging. We've got lots of other big money on the move, trends, robotics, etc. To me, this is a logical extension to where the world's going. Investors who are trapped in where the world's been have missed the boat, so they've got a lot of ground to catch up with.
Keith, in terms of what the recent selling means, how should investors digest some of that?
Well, here's what we have been telling our folks is you take a deep breath. This was highly technical. It did not disturb the business case for owning the world's best companies, which actually is getting stronger by the minute. So yeah, it's no fun. Yeah, it causes uncertainty, but it's not a big deal. In fact, it's perfectly normal because the markets require buying and selling to work properly. It just feels different because it's the end of the year.
How does this set us up for 2025?
Well, it's funny you ask because that's exactly what's on our plate this morning to just talk with about clients. The markets are the only store on earth, Christian, where people fear a sale. I think it sets up a very strong year ahead because this cleans out the weak money. It means the strong money can grab a hold, stay on the right stocks all the way to the buzzer, just like a rodeo.
And in terms of investment themes, obviously, as we mentioned, artificial intelligence drove a lot of the gains early on in 2024. Technology growth, is that a theme that you expect to play out, and how specifically so in the new year?
Well, that's an interesting question. Yes, we do continue to see the market led by U.S. big tech in particular. Investing in AI and robotics and all the derivative technologies is one of the single largest recorded themes in human history. This is not a temporary aberration. This is going to be with us for decades to come. So we're going to continue to play on that. But what we're going to do is look for those tech names, of course, but we're going to look to broaden out the use case. Is it going to go into finance? Is it going to go into defense? Is it going to go into healthcare? Those are all areas that are key concern, key focus for us into 2025, which we think, by the way, will finish next year somewhere north of 7,000 if things go our way.
Wow. And in terms of a percentage basis, that looks like another double-digit gain, doesn't it, Keith?
It does. And history shows very clearly when you get 2 consecutive 20%ers, the odds are very good you'll get a third. Now, obviously, nothing keeps going in a straight line, so we're expecting a pullback mid-year or so. But then again, assuming that we think things play out the way we are hoping, we're maybe 7,000, 7,100 even this time next year.
Interesting. Now, Keith, President-elect Donald Trump made many different promises along the campaign trail. Of course, one of them was tariffs. Another one was mass deportations. Regulation, less of that. Lower corporate taxes. Also, many things that Wall Street expects from the president-elect come January. What's the timeline that those promises play out in the market?
You know, it's very hard to say. I mean, I'm not smart enough to do politics. I do money, right? And my take is that if it introduces certainty, traders are going to want to get ahead of that. So I think they're going to probably get on the gas pretty quickly when it becomes clear that those policies are going to be for real. If they're not, then I think there's going to be a little hesitation. But either way, the theme, the robotics, the AI, the quantum computing, all of those things are going to develop anyway. So the only question is when. Maybe it's a little later into Q1 or even Q2.
Usually we do see some selling in the first quarter. Happened later than normal probably last year, Keith. How should investors be navigating that? Do you see a perhaps seasonal pullback in the first quarter of the new year?
I think that'd be entirely expected, but I do encourage investors to think very carefully about the stocks they want to buy or maybe they don't own enough of right now. Because if there is a pullback, that's the opportunity to go shopping. That's the opportunity to land the big names that you maybe don't have enough of. You don't get that chance very often, especially now with the computers involved, with the big money on the move. You got to pick your bets carefully, and believe it or not, that's an advantage for individual investors.
Now, with rates expected to stay high, Keith, and economic growth expected to be solid based on all indications, including what we heard from Fed Chair Jerome Powell just a few weeks ago, how should someone look at including bonds in their portfolio?
Well, my take is those are always relevant. And, people make the mistake of assuming that they're not just because maybe they're like watching paint dry or they don't understand them precisely. But to me, bonds are an element of stability in your portfolio. Just like you build a house on a great foundation, bonds can be included to do the same thing. So you get equity-like returns if rates drop. but you get the stability and the income that is important to so many investors.
And in terms of setting up themes for the new year, growth, technology, still very much in focus for you, Keith. Any other sectors, perhaps like financials, as you mentioned? What about consumer discretionary, knowing that some of these discretionary names have lagged the broader market?
Well, that's an interesting question. My belief is the answer is no, because those are fickle stocks. What I want to do if I'm going to look at retail or consumer stuff is I'm going to look at the people who sell that. I'm going to look for the Walmarts, the Costcos, the big retailers where customers are going to go. I'm going to look to the Apples of the world where they're going to be using finance and apps to connect to all that, or to go shopping, Amazons. Those are the names that we're going to look at if we want to play that sector.
Keith Fitzgerald, thank you so much for joining. Happy New Year to you. I hope you'll join us in 2025. Keith is principal at Fitzgerald Group.
Happy New Year. Cheers.